From the floor of the CME Group, this is Danny Riley on this Thursday, May 20th. Again, the markets are in a tailspin. You know, the S&P closed at 1109-ish. It opened sharply lower, and at one point the S&Ps were down 35 handles. This desk said sell the rallies. That's the way we see it. We also said that we thought that, you know, that 1050 in the S&P is on tap, and ladies and gentlemen, it is on tap. There is really little bit that we can do about the way the markets are free falling now. You have all these currencies, cross currencies unwinds going on, like the Euro-Canada right now is up 225. I mean, this is unheard of. At one point, the yen was up 300. You know, we just don't see this kind of stuff. Over in the interest rates, they've been busy, but not anywhere near what we've been seeing in the indices and indice options here. Right now, the S&P is trading at 1080. It's got a 1074 half low. Now the markets don't look good, and for the markets to be rallying at this time of the day and then selling off, what that tells us is there's a lot more here on the downside. Now, as far as volumes are concerned, we've got about 2.25 million minis, and we started out with about 600,000, so we've got about 1.8 million minis, something like that. That's not bad for this time of the day. We think that's going to pick up significantly into the end of the day. Now, there's a couple other things that we want to point out. Today and tomorrow's the May option expiration. So you're not only getting this kind of motion that's going on in the market right now, but you've got the option expiration, and then you've got you've got a bunch of numbers coming out tomorrow that I think could affect the market even further to the downside. As far as, you know, the volumes are concerned, you know what? They're always better on the downside. And the guys in this pit, they love it. It's where they get it's where they make their money. Now, we've talked to a lot of these locals over the last week or two. Some say they didn't do all that well, but other guys are saying they've done really well. And we suspect that this will continue. You know, as the markets have been up for almost 14 months straight, 12 months straight, we're finally starting to get some reprieve to the downside. The scary thing about this is that crude oil is down again today. You know, it's very hard to gauge all this when you've got the commodities, you've got the metals, and you've got everything going in the same direction. At some point, this will detach a little bit, but we don't think that the stock market can go up that much. You know, from here, the way we see it is the big resistance would come in around the 1080, 1085 level. And above that, we've got like the 90-95 level, and above that, we've got 1104-ish. But really what we're looking at, we're not looking upside resistance, we're looking at downside support right now. And we're really thinking that 1050 is where we're headed. As far, you know, we don't really think that there's, again, what we've tried to point out over the last couple of days is that this kind of back and fill thing that we've been talking about for a long time is completely gone. Every rally that we see now is being sold. We'll be back tomorrow with another update.